I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a return guest by a favorite guy, money manager Peter Schiff at Euro Pacific Capital and also Schiff Gold. Peter Schiff, thank you for joining us today on USAWatchdog.com.
Greg, it's always a pleasure to join your broadcast.
Well, listen, I remember back in the mid 2000s, you were warning about problems. Probably you wrote a book about the real crash. You sure enough, they came out with a video saying, well, Schiff was right. I think they're probably compiling that video again, about how you're warning. Everybody's like, you did, because they don't have you on CNBC. They don't have you on Fox Business. You're obviously a smart guy, and you're worried about things going on like this $4.5 trillion budget. Let's start there.
Yeah, well, of course, government spending is a big part of the problem. When government is spending, those resources have to be taken from the private sector. So if government is getting bigger and more expensive, then you have to ask yourself, what are we giving up? What do we have to do without in order to free up all those resources to be consumed by government? And of course, the more resources that government consumes, government is a not efficient user of those resources. So resources left in the private sector are going to be utilized far more efficiently than those that are, commandeered by the government. So this is a big problem, that government is getting bigger, but a bigger problem is the way we pay for it, right? We just recently had tax cuts, right? Donald Trump made a big deal about cutting taxes. Well, if he's going to increase the cost of government, how are we getting a tax cut? The answer is we're not. Right? The president was lying. Congress was lying. Taxes are going up because we have to pay for all the money that the government is spending. One way or another, we have to pay for it. Now, if you borrow the money, what you're simply doing is delaying the payment of taxes to a future date, but you are also adding the interest. So if I'm going to, buy something on credit, right, it's going to cost me more money. And the same thing is true with government. So paying for government with debt is more expensive than paying for it with current taxes, because you have to spend even more in future taxes. But what I'm really afraid of is the real way we're going to pay for all this debt is going to be through inflation. Ultimately, it is the Federal Reserve that is going to create money to buy up all the bonds that the government is selling in order to fund its operations, because nobody is going to want them. And then the value of the dollar is going to plunge. And the way we're going to end up paying for government, not only current government, but all the deficits of the past, is going to be a collapsing value of the dollar. So the government, rather than taking our money, will take all of the value from our money, all the purchasing power, as the debt gets repudiated through inflation.
What do you think about them marching Jerome Powell out, head of the Fed, on 60 Minutes? To tell everybody that everything's okay? I'm thinking, wow, there's no problem. You don't have any. You have a $22 trillion deficit, and you have a skyrocketing budgets, and there's nothing wrong. But why do you think they did that? I mean, that was they marched him out to the biggest audience they could get, not at 2 o'clock in the afternoon on CNBC.
Yeah, not only did they have Powell on there, but they had Yellen and they had Bernanke. Now, the one guy they didn't bring out was Alan Greenspan, because Alan Greenspan, of the four, Alan Greenspan's the only one that's saying things are, we're in trouble. Alan Greenspan is talking about stagflation, so he gets it. I mean, in fact, he's the one that wrote the playbook that they're all following. So he's the guy that knows how it's going to end. I mean, I think all the other Fed chairs that have succeeded Greenspan, are clueless. But I think Greenspan actually knows better, which is why he could be the worst of them all, because he got this started knowing how badly it was eventually going to end. I mean, Powell is clueless, I think, about it. But, they brought him on, and he talked about how great the economy is doing, right? And, he got one question about, well, aren't you worried about, all these delinquent auto loans? And of course, auto loans, it's not just that we have a record in delinquencies because we have a lot of loans now, but the rate, right? The percentage of loans that are delinquent is the highest it's been in 10 years. So the last time this large a percentage of Americans couldn't make their car payments, we had unemployment of 10%. Now we have unemployment of 3.8%, at least officially. So if people are struggling with their car payments now when they're employed, Imagine what happens in the next recession when they lose their jobs. But when Powell was asked about this on 60 Minutes, he basically said, well, I guess that means that this widely shared prosperity, this broad-based prosperity, I guess everybody isn't participating, which is such an understatement, because if it was a broad-based prosperity, we wouldn't be having this problem with delinquent car loans. But it's not just car loans. People can't pay their student loans. They're delinquent in their credit card debt. And all this supposedly when the economy is good. And in fact, Powell said that nothing worries him. He was asked about, is there anything in the U.S. economy that you're concerned about? And he said no. I mean, he said the only thing that he might be concerned about is if some of the problems overseas in Asia or in Europe, if some of those problems maybe spill over to the United States. But in other words, he sees no problem here, even though we have the largest budget deficits in our history before a recession. And in fact, don't just look at what the government reports. Look at how much the national debt is actually increasing, right? Look at the debt at the beginning of the year and at the end of the year, because the actual amount of money the government is borrowing is much larger than what they pretend they're borrowing with the official budget. I think the national debt was up like 1.4, 1.5 trillion in 2018. I don't know the exact number, but it was a huge amount, and it's probably going to be even greater in 2019. Look at our trade deficits. Despite Donald Trump and his tariffs and how he's talking about how America is winning again, we had the biggest annual trade deficit ever in 2018. We're going to beat that record in 2019. So we have the twin deficits going off the charts, right? And none of that worries Powell. He's not worried about record corporate debt, about record individual debt. We have record student debt, auto debt, credit card debt. None of that concerns Powell. We have record debt for state governments and municipalities. We have underfunded pensions in both the public and private sector. And we have interest rates rising, right? Interest rates have risen quite a bit from where they were a few years ago. And all of that is an added cost on an over-leveraged economy. The reason that the Fed did this about face, the reason that they are now patient, right? The reason that they stopped raising interest rates, the reason that they're now reconsidering following through with their plan to shrink their balance sheet, it's got nothing to do with problems overseas. It's all about the United States. I knew this day was coming even before the Fed raised interest rates for the first time. I said that if they ever attempted to normalize rates, they would fail. They would have to call off the process prematurely, because in the process they would prick the bubble, and that is exactly what they did, except they didn't want to admit that, so they made up an excuse as to why they had to stop raising rates. But it's all about the enormous amount of debt that we have. They had inflated a bubble where you had all this debt. It's impossible to normalize interest rates under this scenario, so they came up with an excuse to stop. But what the markets still don't get is this is not enough. That the Fed is going to ultimately go back to zero, that the Fed is not going to just not continue to shrink their balance sheet. They're going to blow it up even bigger than it was before they started to shrink it, because there's no way that they could stop the recession from coming. They're not going to stop the bear market, so they're going to have to go back to the QE again. But I don't think that the Fed is going to succeed for a third time in inflating a bigger bubble. I think when they try to reflate the asset bubbles in stocks and real estate and bonds, they're just going to prick the dollar bubble. And that's when we have a real crisis.
Greenspan said years ago, he's on, about this. You've seen this. Years ago, he said they're asking him about paying, defaulting on the debt. And he says, well, we can just print money. We can default on the debt. We can guarantee the debt, but we can't. Said something to the effect. It's not a direct quote, but pretty close. He said we could not guarantee the value of the dollar, the buying power of the dollar. Is this why you think they didn't have Greenspan on? That's why he was the best known of all the central bankers. And this is why you think they didn't have him on, because they were afraid that this was really just a psyop. This was just a public relations ploy by the Fed to get on 60 Minutes and not talk about anything. Go ahead.
Greenspan is a lot more worried about the economy than the other three. And of course, Greenspan is still associated with the financial crisis because, he was the Fed chairman for all those years while the housing bubble was inflating. And so then it popped. So maybe they didn't want to bring him back. Everybody falsely believes that Ben Bernanke saved us. He didn't save us from anything. He threw gasoline on a fire, and it's going to come back bigger than ever. But now you've got a lot more people that aren't concerned about printing money and deficits, or they call this modern monetary theory. But MMT, there's nothing modern about it at all. I mean, we've always known that governments could print instead of legitimately finance their spending. But then that leads to a decline in the value of the dollar. Look, the last really substantial dollar decline happened in the 1970s, right? The dollar lost about 2/3 of its value relative to the Japanese yen, the Deutschmark, the Swiss franc. During the 1970s, we had the big inflation, we had the stagflation. Oil prices really went up tenfold from like $3 a barrel to $30 a barrel, and everything went up. And we tried to blame increasing oil prices on OPEC, but it wasn't about OPEC raising the price of oil. It was about America decreasing the value of the dollar because we went off the gold standard in 1971. And so we went from paying for oil with gold to paying for oil with just paper. And so the paper lost a lot of value relative to gold. So OPEC had to raise the price of oil in terms of paper. In terms of gold, the price of oil didn't go up at all. But why did we have all that inflation during the 1970s? It was because of the deficit spending of the 1960s. It was because of the Great Society and the war on poverty. It was because of the Vietnam War and the mission to the moon and all the things that we did that we didn't pay for. We ran big deficits. They called it guns and butter. Well, we spent money on the military. We spent money on welfare programs that we didn't have. We went into debt. We printed a lot of money, and we paid for it with the 1970s. And, the 1970s saw a big reduction in the American living standard. One of the ways that manifested itself was the big influx of married women into the workforce because inflation was so bad during the 1970s that the average guy, his salary lost so much purchasing power that he couldn't support his wife and kids. So his wife had to get a job. And also during the 1970s, a lot of people got pushed into higher tax brackets. They called it bracket creep. So it wasn't just inflation that was eroding away your take-home pay. It was taxes. And so women had to work. And I think that really represented a decline in our standard of living, where now you needed two breadwinners to support a family, whereas previously it only took one. And so the family life suffered as a result of that. But I believe that the decline in our standard of living that we are about to go through is going to be much worse because the dollar is going to lose more value than it did in the 70s because the deficits, the inflation, the amount of money we've created is much bigger. The economy is much worse. I mean, back in 1970s, we were still a creditor nation. We still had trade surpluses. I mean, we are a shadow of our former selves. So we're going to see a huge collapse in our standard of living. Unfortunately, women are already working. So I don't know what we're going to do. Take our kids out of school and send them to work? I think what's going to happen is that a lot of the retired Americans, the baby boom who is already retired, they're going to have to go back to work. They're going to have to get jobs, doing I don't know what, but they're going to have to do something because the value of their savings, the value of their investments is going to be destroyed in this next dollar crisis because it's not going to be just going off the gold standard. Because when we went off the gold standard, the dollar remained the world's reserve currency. As a result of this crisis, the dollar is going to lose that status. The dollar is just going to be another fiat currency, and its value is going to be a function of our productivity. But we don't have that. We have these huge trade deficits because we've lost our manufacturing infrastructure. So the dollar is going to collapse, and America's days of living beyond its means are going to come to an end. But that also means that the rest of the world is going to enjoy a boom as a result of being relieved of the burden of having to support and subsidize American consumers. But that's why it's very important for investors to do something now to protect themselves. If they want to preserve their retirement, they better preserve the value of their retirement savings. Because I think for most Americans, it's their portfolios that are going to retire, right? And they're going to have to go back to work. So getting money out of the U.S. dollar, out of U.S. stocks and bonds, into foreign assets, into precious metals, into gold stocks, emerging markets. I think that people have, this window of opportunity that's obviously doesn't have nearly as much time as people had, a while ago. Now that the Fed has basically, done the about face, I think, the time is running out quickly to protect yourself.
Is this why gold is catching a bid that's just clawing its way up? I mean, some of my sources, one of them, Rob Kirby, says, that China and other countries around the world, Russia, this is not a big secret. They're all quietly venting off the dollars and they're buying gold, and you're seeing gold rise, and the dollar kind of just sitting there. I don't know what they're doing to manipulate it, but everything's manipulated. But I mean, is this why gold is catching a bid, and do you think it's going to get worse?
Yeah, I think this is the calm before the storm. People don't really perceive it. Maybe it's like, Wile E. Coyote has run off the cliff and he just hasn't looked down yet. So he doesn't realize where he's standing. But now that, again, the Fed has stopped raising rates and they're not going to shrink their balance sheet, which, again, I said from the beginning they could never do. It was all talk. There was no way the Fed was ever going to be able to achieve this goal.
They tried.
But they didn't. I mean, again, the only reason that the Fed was able to raise rates was because Trump was elected. I mean, if Trump had not been elected president, if Hillary Clinton had won, the Fed would have stopped after the first rate hike. It would have been one and done. In fact, we would already be at zero. We'd already be doing QE because we would already be in recession. But because Trump came in and engendered a bunch of false optimism and was able to deliver more stimulus in the form of a tax cut, the big, fat, ugly bubble that Donald Trump pointed out as a candidate got much bigger while he was president. And what we did is we kicked the recession can down the road for a few more years. That's it. But now, of course, it's a political disaster because it's all going to be blamed on Trump. It's all going to be blamed on capitalism. Capitalism always gets blamed when government interferes with capitalism and creates a problem. But this is all going to get blamed on capitalism. This is the worst possible time because socialism is really gaining traction in the United States, and socialism is going to be seen as the solution to these problems, and we're going to have to deal with that in 2021. But getting back to your point on gold and the dollar, right now, nobody appreciates the magnitude of what just happened at the Fed or why. But at some point and some point soon, right, people are going to appreciate this. I think when you look at the economic data, look at the numbers we have. The retail sales for December was like the worst in 10 years. In fact, they just revised it and made it an even bigger drop, I think, yesterday. Fourth quarter GDP now, the Atlanta Fed, their estimates, or first quarter, their estimate is 0.2. 0.2 for Q1 GDP. We just got the February jobs report. They were expecting about 200,000 jobs created. Only 20,000 jobs were created. Looking at the numbers, you're having a rapid slowdown. Yet despite that, everybody still thinks the U.S. economy is going to grow for the entire year close to 3%. They're completely wrong. People still think that we've got the greatest economy ever because, we keep hearing that. Trump keeps repeating it. Wall Street, loves hearing that nonsense. But the economic picture is rapidly deteriorating because all we have is a bubble deflating. We never had a legitimate recovery, not under Trump, not under Obama. But as people connect these dots, the dollar is going to fall, and it's going to fall hard, and gold is going to take off. I mean, maybe it has to get above some of this resistance between 1350 and 1400. But once I think we see gold above 1400, we're going to see it moving up 50, 100 points a day or $100 a day. I mean, we're going to take out that high, the 1900 high that we had in 2011. We'll eventually take that out. And when we do, we're going to go dramatically higher.
What do you think about the Basel? Not a lot of people are talking about, not even on CNBC, which I think is a huge sea change. Back in 2012, the Basel III agreements, they said, well, in 2019, March, at the end of March, beginning of April, we're going to allow gold to be a tier 1 asset at 100% value. Wow, that's coming up real soon. What do you think about them, this ticking clock that allows gold to be valued at 100% of its value, where it was 50% right now? It's going to be 100% of its value, I think, on April 1st. What do you think about that? Does that put a floor to gold? Does that stop the short selling? I mean, are the central banks going to step up and say, stop? Hey, that's my tier 1 asset. What are you doing? Go ahead.
Yeah, look, gold shorts are going to lose an incredible amount of money. I mean, that's probably one of the most foolish things you can do. There's a lot of great things out there that you could short. Right? The last thing that you should be shorting is gold. And of course, for central banks, gold is the safest reserve asset. Of course, I mean, it's the only asset that's not somebody else's liability. right? Gold is real. You have all these fiat currencies backed by other fiat currencies, which is like being backed by nothing. You need to be backed by something, and there's something that can give value to fiat currency is gold. And of course, if your fiat currency is backed by gold, it's no longer fiat. It's legitimate currency because it's backed by real money. The problem is when you have currency backed by nothing, it doesn't work. You have these inflations that enable governments to get bigger and bigger and bigger, and these asset bubbles to be inflated, and we're all going to have to suffer when these bubbles pop. But I think that the world is going back to gold, and I think there was a brief distraction for a number of people, got caught up in the crypto bubble rather. I think that bubble popped a little over a year ago when you saw Bitcoin up near 20,000. I mean, as we're recording this now, Bitcoin is just a little bit south of 4,000. But believe me, most of the air is still in that bubble. All we did is remove some of the froth from the basic, speculative blow-off top from the bubble. But I think one of the things that's going to happen when gold really breaks out is these cryptos are going to break down. And I think a lot of the people who took refuge in digital fool's gold, they're also going to be moving back to gold. I think this whole infatuation with these cryptocurrencies, fiat cryptocurrencies, is going to end. And I think you're going to see a lot more people from crypto and from legitimate or other paper fiat currencies seeking out gold.
Should we pay? I'm sorry. Go ahead.
No, go ahead.
Should we pay more attention to this tier 1 asset change, though? I mean, April 1st, that's a massive change that every central bank and every big bank can now hold gold at 100% of its value. It's a risk-free asset.
Yeah, well, I don't understand why they would ever apply a haircut to gold in the first place. I mean, again, gold is the safest reserve asset for a central bank to own. And, in fact, the only reason that the dollar became the world's reserve currency, and people forget this, because we weren't always the reserve currency, but in 1971, America had all the gold. And so, that's the expression, the dollar is as good as gold, because the dollar was redeemable in gold. So when Germany or when Japan held reserves in US dollars, they de facto were holding reserves in gold, or at least that's what they thought, until we defaulted on that promise. We basically told the world, we're not going to give you the gold that we promised we were going to give you. You're free to hold on to those IOUs, but now they're IOU nothing. They used to be IOU somethings. If you had $35, we owed you an ounce of gold. And then Nixon said, if you have $35, we don't owe you anything, because the dollars were the gold. Federal Reserve notes were in dollars. The dollars legally were the gold. That's what the dollar was. The dollar was gold. It was a weight of gold. And the Federal Reserve note was merely a promise by the Federal Reserve to pay dollars, which were gold. And then we defaulted and paid nothing. So, yeah, I mean, I think the world central banks are going to go back to dollars. See, the problem is, though,
well, they're going to go back to dollars, going to go back to gold.
Go back to gold. Yeah. The problem is that the central banks don't own enough gold. A lot of central banks have sold their gold. There are central banks that don't own any. Look at Canada. So, a lot of these central banks are going to have to be buying gold. And where's the price going to be? Much, much higher, because, obviously, if they have to step into the market and buy, the price is going to have to go up dramatically in order for them to buy the amount of gold that they would need to back up their currencies.
Oh, so that's that puts a big floor into gold. This change will put more demand on gold. It's going to be demand on gold for delivery then. They say at COMEX there's 100 to 1 or 300 to 1 that there's way more demand for the ounces than what they have ounces. There's a lot of people think they own an ounce of gold and they don't. What happens when all these people say, "Hey, I'd like to have my ounce of gold now," and they go, "Yeah, we don't have it."
Well, that's going to be another, big factor pushing gold higher. I mean, 5,000, 10,000, who knows, how high it's going to go. There's no real ceiling on the price of gold because there's no floor to the value of the dollar or other fiat currencies. But there are a lot of trading. There is a lot of trading that goes on. People who don't own gold sell it to people who don't really want to buy it, right? Everybody is just trading. But at some point, a lot of the people who are long gold through some type of futures contract or an option on futures are going to want delivery. And the other side of the contract doesn't have the gold to deliver. So where are they going to get it? Well, they'll have to try to buy it. And again, that's just going to add to the fuel or to the rally because the supply is not going to be there. And yeah, I mean, so gold is going to skyrocket, one of these days for a lot of reasons, and obviously, we're getting closer to that point. But that's why I, tell clients, just own it. You don't want to scramble to buy it when you're competing with everybody else who's trying to buy a limited supply of gold at the same time. Buy yours now while there's still a lot of people dumb enough to sell it to you.
We'll close right there. Of course, you're Peter Schiff with Euro Pacific Capital, but you also have Schiff Gold. And Peter, thanks for coming on and giving us an update on what's going on with the economy and this $4.75 trillion budget proposal and gold. I think gold's going to be a central figure, a key element in going into the future for the financial system. Am I right?
Well, gold's money. Gold is money. It's been money for thousands of years, and it will probably be money for thousands more. But that doesn't mean that governments aren't going to try to supplant it. Every once in a while, governments do this. Governments try to create, money out of thin air because it serves their purpose. It makes it easier for governments to grow and to play Santa Claus and promise something for nothing. But all these experiments end in misery, and the current experiment is no different. I mean, this is probably the biggest global experiment in fiat money, but it's not going to end any better than any prior experiments. It's going to end in disaster. But there is a lot of opportunity there for the people who recognize this, because again, we are probably in the ninth inning of this, and there's a lot of opportunity for people to buy gold now before it's revalued to reflect what it's really worth. Relative to all the fiat currencies that have been created out there, so either prices have to collapse, or the price of gold has to skyrocket in order to bring this into balance, and that's more likely what's going to happen, right? Because you look at the incredible increase in the supply of fiat currencies, you haven't seen a commensurate increase in the price of gold. That's coming, and it's not just the increase in the quantity of paper money that has taken place in the past, but the enormous increase that is about to happen because of all the debt around the world that is unpayable without a printing press. And so a lot more money is going to have to come into creation, and gold simply measures the value of all that fiat money that's being created. And it's really not going to be the value of gold going up so much as the value of fiat currencies going down.
And just a word for silver investors, because they'll be saying, why didn't you ask him about silver? And what your thoughts on silver? I mean, it's 15 bucks an ounce. I mean, it's cheap.
Silver is going to have a bigger percentage move than gold. I mean, that's typically what happens. Look at last time. Silver went up to $50 an ounce. Silver started, I think, silver was around $3 to $4 an ounce, something like that, in 2000, 2001, when gold was around 260, 270. And gold, went up to 1900, but silver went to 50. It was a much bigger percentage gain. Of course, silver gave up a bigger percentage of that rally, right? From it fell more. It's a more volatile metal. But if I'm right about gold going to 5,000 or 10,000, I'm sure that the percentage gain in silver when that happens will be even bigger.
We'll stop right there. Peter Schiff of Euro Pacific Capital, also Schiff Go. Peter Schiff, thanks for coming on USAWatchdog.com. You're a big favorite. You had, 300,000 views the last time you were on. So you're a big favorite. Thanks for coming on and taking us to school.
Well, a lot of that is up to you, because I don't get 300,000 views when I do a video on my channel. Well, I get more views when I come on your channel than I do on my own YouTube channel. So a lot of that is your fault, not mine. Well, you can't give me the credit.
Well, listen, I'll give you all the credit I can. I mean, I don't get. Anyway, listen, you're a great guest. That is for darn sure. And thank you for coming on USAWatchdog.com.
Sure, my pleasure. And keep up the good work.